Over the past few weeks, I've been exploring the different investment apps and platforms available for UK investors. So I've done the hard work for you and put together a list of some of the most popular stocks and shares ISA providers, which I will rank using this tier list. The main criteria I'll be using to rank these platforms are their fees, reputation, available account types, investment options, and overall user experience. But the most important factor will be fees and charges. Alright, let's get into the platforms. Let's start with InvestEngine. This platform has been around since 2019, making it the newest one in today's lineup. As you can see, they offer 4 types of accounts: a general investing account, a stocks and shares ISA, a self-invested personal pension, and even a business account. Once you've picked your account, you can create your portfolio. You've got a couple of options here. You can take the DIY route and build your portfolio yourself by selecting the ETFs that best match your investment strategy. If you choose the DIY approach, you'll have access to a wide range of investment options. One thing you'll notice right away is that InvestEngine is all about ETFs, or exchange traded funds. In total, there are nearly 800 ETFs on the platform, and they are constantly adding more. You'll find everything from broad global ETFs that cover the entire stock market to more specialized ones focused on themes like artificial intelligence, money market funds, and commodities. You can choose just one ETF or mix and match a few, deciding the percentage you want to allocate to each one. Another great feature is that InvestEngine allows you to invest in fractional shares. So if you have £50 to invest, but an ETF costs £100, you'll still be able to invest in half a share. This is especially helpful for new investors with smaller amounts to start with. If you prefer something simpler, InvestEngine also offers a life plan option. This is similar to the Vanguard Life Strategy range, with a collection of pre-made portfolios you can choose from based on your risk tolerance. And if you really want to keep things easy, there is the managed portfolio option, where InvestEngine takes care of building and managing your portfolio for you. Now let's talk about fees, which is an important factor for any investor. InvestEngine keeps things really cost effective, with low or even no fees depending on how you choose to invest. If you go the DIY route, there are no account fees, no trading fees, and no commission when buying or selling ETFs. The only fees to be aware of are the charges from the ETF providers themselves. The life plan range costs 0.25% per year, and the managed portfolio option also comes with a fee of 0.25% per year. As for managing your account, you can use either their app or their website, whichever you prefer. Personally, I find the platform really simple to use. It's clean, easy to navigate, and great for beginners. All in all, InvestEngine is one of the lowest cost investing platforms available in the UK. So in my opinion, considering all the factors we've discussed, InvestEngine belongs in the S tier. Even though they are a newer provider, they offer everything you need to build a solid investment portfolio at the lowest fees currently available on the market. Next up is the biggest name in the UK and one of the more established players, Hargreaves Lansdown. HL offers just about every account type you can think of: pensions, cash ISAs, general investment accounts, stocks and shares ISAs, and more. They are a full service platform, which means you can access funds, company shares, and ETFs from nearly every market in the world. On top of that, they also offer a range of managed portfolios, making them a strong option for investors who want a more hands-off approach. So if you're unsure what to invest in, HL offers ready-made portfolios based on your investment goals, whether that's building wealth over the long term, generating monthly income, or saving for retirement. Each of these comes with different options. But if we take the long-term investing strategy as an example, you'll find 2 different management styles. First, there is the expert management style. This is an actively managed option where professionals pick and manage investments for you. However, this comes at a cost, with fees starting at 1% per year. Then there is the market tracking option. This is the passive investing option, where your portfolio simply tracks the market instead of being actively managed. For most beginner investors, this approach makes more sense, and the fees are much lower at 0.3% per year. Both of these management styles offer 4 different portfolios, ranging from adventurous to cautious. All you have to do is pick one and Hargreaves Lansdowne takes care of the rest. Personally, I'm not the biggest fan of these portfolios, mainly because of the fees. For example, if you go with the adventurous portfolio, you'll pay 0.3% for the funds themselves, plus a 0.45% platform fee. That brings your total fees to 0.75% per year. For a portfolio you could build yourself on another platform for as little as 0.20%. So if keeping fees low is a priority, this isn't the most cost-effective option in my opinion. In fact, let's take a closer look at fees and charges. So here is how their fee structure works. First off, there are no charges for opening an account or holding cash. But as you can see here, your annual account charge depends on whether you hold funds or shares. If you invest in mutual funds and have less than £250,000 in your account, you'll pay a 0.25% annual account fee. As your portfolio grows, the fee decreases and is completely removed once you have over £2 million invested. For individual shares, investment trusts and ETFs, the fee structure is a bit different. If your portfolio is under £10,000, you'll pay 0.45% per year. But if your balance is above £10,000, you'll instead pay a flat fee of £3.75 per month. So investing in mutual funds comes with different fees than investing in ETFs. And this is on top of the annual cost of the funds themselves. The thing is, most people will invest in ETFs. And when you break it down, that £3.75 per month isn't actually too bad. For a £10,000 portfolio, is the equivalent of just 0.45% per year. Sure, it's a relatively high cost, but as your portfolio grows, this flat fee becomes more cost efficient. For example, at £50,000, that £3.75 per month works out to only 0.09% per year. So for someone who holds a global equity ETF, for example, and has a larger portfolio, it can actually be pretty cost effective. I hope I'm not missing anything here, but please let me know in the comments if I've overlooked something. There are also dealing charges to be aware of, which can add up quickly if you trade frequently. In terms of user experience, I think their website is great, though it can feel a bit overwhelming when you first get started. That said, it's clean, well organized, and packed with information. So if you like having detailed data and research at your fingertips, HL definitely delivers. They also have a mobile app, which I think is one of the best for tracking your investments. So on balance, considering all the factors, I'm placing Hargreaves Lansdowne in the B tier. While their fee structure benefits larger portfolios, it still falls behind other providers when it comes to offering value for investors with smaller portfolios, as you'll see shortly. Next up, we've got Trading212. If you're new to investing and want a super easy to use platform, Trading212 is one of the best out there. You can use it for general investing, stocks and shares ISAs, and even a CFD account if that's something you're interested in. They've got a huge selection of stocks and ETFs, covering both UK and US markets. Pretty much any company share or ETF you can think of is available on this platform. Now, one of the most attractive features of Trading212 is that they let you buy fractional shares. This means you don't need to buy a full share if you don't have enough money. For example, if a share of Apple costs £500, you won't need to save up that full amount. You can invest as little as £80 instead. And this works for ETFs too, not just individual stocks. Another feature you might like is Auto Invest, which works like a robo-advisor. You just tell them what you want to invest in, how much and how often, and they'll handle the rest. As part of this, Trading212 also offers pies, which are essentially bundles of stocks and ETFs grouped together. You can even copy other investors' pies if you want, making it easier to build a diversified portfolio. Of course, this is just an optional feature, so you don't have to use it if you prefer to pick your own investments. Now let's talk about fees. Guess what? Trading212 doesn't charge any platform fees for your ISA. There are no trading fees, apart from the exchange rate costs when buying anything not in pounds, and no fees for dividend reinvestments or withdrawals. When it comes to reputation, they've been around for a while and have proven themselves as a solid platform. Their website is clean and easy to use, and they also have a mobile app that makes managing your investments simple. So overall, Trading212 is definitely one of the best options on the market, and I'm placing them in the S tier. Just before we move on to the next provider, do me a huge favor. hit that subscribe button if you're enjoying this video. Thanks. Okay, moving on, let's talk about Freetrade. They don't offer as many account types as some of the other providers, but they do have the essentials that most people will need. A stocks and shares ISA, a SIP, and a general investing account. When it comes to what you can invest in, it's pretty straightforward. They've got a solid selection of stocks, ETFs, REITs, and investment trusts. However, they don't offer mutual funds or anything like that. That said, if you just want to keep things simple, you can easily build a great portfolio made up entirely of ETFs. Now let's talk about fees. Freetrade takes a slightly different approach compared to some of the other platforms we've covered. Instead of a percentage-based fee, they use a fixed monthly fee model. As you can see here, the only free account is the general investment account, but the free version does come with some restrictions. If you want more features on the general investment account, you'll need to upgrade to the standard plan, which costs £4.99 per month, regardless of how much money you invest. This standard plan also applies to the stocks and shares ISA, meaning if you want to open an ISA, you will need to be on at least the £4.99 per month plan. And if you want to add a pension, you'll need to upgrade to the Plus plan, which costs £9.99 per month. One nice perk of the Plus plan is that you can earn up to 5% interest on up to £3,000 of uninvested cash. In fact, if you had £3,000 sitting in the account earning 5% interest, it would more than cover the $9.99 monthly fee, leaving you with a little extra on top. There are also other perks with the Plus plan, so it's worth looking into if you're considering it. From a cost perspective, it really depends on how much you plan to invest. If you have a larger portfolio, a fixed fee could work in your favor. When it comes to user experience, both the website and mobile app are really well designed. It's super easy to navigate and you can see all your investments in one place without any hassle. All things considered, I believe Freetrade should be placed in the C tier. The reason for this is that based on their fee structure, Freetrade ends up being more expensive than Hargreaves Lansdown if we assume you're investing in ETFs only. This is because HL is capped at £3.75 per month, while Freetrade charges £4.99 per month. Next up is AJ Bell, which is a pretty well-known name in the industry. AJ Bell offers just about every account type you can think of, from general investing accounts to ISAs, SIPs, and even a lifetime ISA. So if you're looking for choice, you'll probably find everything you need here. They've also got a huge selection of funds, shares, and ETFs. So no matter what you're interested in, you'll definitely find something that suits you. AJ Bell also offers a managed service if you're unsure what to invest in. You simply need to choose your investment style, with options like growth, responsible growth, and income. Just like Hargreaves Lansdown, you can select from various risk levels, ranging from cautious to global growth. However, keep in mind that this managed service can cost you up to 0.50%. Depending on the option you choose, and that's on top of the account fee. When it comes to fees, AJ Bell is quite similar to Hargreaves Lansdown, but slightly cheaper. Firstly, there are no fees for setting up an account, withdrawing money, or holding cash and topping up. AJ Bell also has a tiered platform fee, which is a percentage of your overall portfolio. This fee applies to both shares and funds, starting at 0.25%. It then lowers as your investment account increases. However, there are dealing charges if you want to trade shares, so keep that in mind. In terms of user experience, their website looks a little outdated compared to some of the other platforms we've covered. But if you're comfortable with investing, this may not be an issue. They also have a mobile app, which is really helpful for tracking your investments on the go. I think it's actually a pretty solid offering, especially for larger portfolios. When it comes to tier ranking, taking all the factors into account, I believe AJ Bell deserves to go in the A tier. If we specifically look at their fees, AJ Bell turns out to be cheaper than both Freetrade and Hargreaves Lansdown, especially since their fee is capped at £3.50 per month once you have £16,800 invested in ETFs. So surprisingly, it's actually quite a competitive offering. Right, next up is Interactive Investor, which is a well-established platform that's been around for many years. They offer all the standard types of accounts you might need: stocks and shares ISAs, personal pensions, and a general trading account. You can also invest in just about any type of asset you're interested in, whether that's shares, index funds, ETFs, and so on. They also offer a managed service, which can be really helpful if you're not sure where to start or what to invest in. However, keep in mind that it will be more expensive than building your own portfolio. When it comes to fees, Interactive Investor has a fixed fee structure, similar to free trade, with different plans depending on whether you're using an ISA or a SIP account. For example, if your stocks and shares ISA portfolio is up to £50,000, you will pay a platform fee of £4.99 per month. If your portfolio is above that, you will be charged £11.99 per month. In my opinion, this is quite steep, but it could be worth it for those with larger portfolios. When it comes to user experience, their website looks clean and modern, and everything is structured in a very user-friendly way. They also have a learning platform where you can dive deeper and find out more about investing. And they also have a mobile app, which is a nice touch if you prefer managing things on the go. In terms of ranking, I am placing Interactive Investor in the D tier, mainly because of their fees, which end up being more expensive compared to investing through any of the other platforms we've discussed. Okay, this video wouldn't be complete without talking about the old giant in the room, Vanguard. As you can see from their website, you can use Vanguard for just about everything. When it comes to the investment choices, you're only going to be seeing Vanguard's own index funds, ETFs, and actively managed funds. There are no individual company shares available here. You've got funds focused on dividends, bond funds, and even pre-made portfolios like the Life Strategy range or Target Retirement range. So if you're not comfortable picking your own investments, you can always go with one of these pre-made options. In total, you've got access to 86 different funds. Now, when it comes to fees and charges, Vanguard used to be known as one of the cheapest providers out there. However, they left many investors disappointed when they announced changes to their fee structure. In the past, the account fee was fixed at 0.15% per year and capped at £375 per year once your balance reached £250,000. But recently, Vanguard introduced a £4 per month minimum account fee for anyone with less than £32,000 invested across all their accounts. This new £4 per month fee is equivalent to the old 0.15% fee on £32,000. For balances above that, the fees remain the same. At first glance, £4 per month might not seem like much, but it does make Vanguard less competitive. For smaller investors, this could be a bigger deal. So while Vanguard has traditionally been a great choice for small investors, this change removes their edge. And I think it now places them among the least competitive providers for smaller investors. What's interesting here is that although Vanguard is still seen as a low-cost platform, it was actually in the small investor segment where they stood out as one of the most affordable options. However, when it comes to larger balances like £100,000 or even £500,000, Vanguard starts to fall behind. In terms of user experience, their website is really easy to navigate. Clean and simple. They also have an investing education section to help you learn more about investing. They've now got a mobile app too, so you can access your portfolio on the go. In terms of tier ranking, honestly, I will place Vanguard in the C tier. With their new fee structure, they've become more expensive than most of the other platforms we've discussed. For example, you'll pay £48 per year until your portfolio reaches £32,000. Once you pass that amount, you'll be charged 0.15% per year. But this fixed percentage fee ends up being more expensive as your portfolio grows. For instance, on a £50,000 portfolio invested in a simple global ETF, 0.15% per year comes out to £75 annually. Compare that to AJ Bell at £42 per year, Hargreaves Lansdowne at £45 per year, and Free Trade at £60 per year, and Vanguard starts to look a lot pricier. You might not agree with me, but I think Vanguard has really fallen behind. The only thing stopping me from putting them in the D tier is their reputation and cheap funds. Although even their fund fees are becoming less competitive, as other established providers are offering cheaper, similar products. At the end of the day, it's up to you which provider you choose. But the main thing to focus on is their fees. You need to figure out which platform will be the most cost efficient based on your portfolio size. And while you're at it, check out this video next to find out how much people in the UK are earning and how we compare to others based on where we live, our age, and so on.